Today is Monday, July 6th, and this is a post-market review for the stock market activities today. We will start per usual, combing through the headlines and the important events that preceded the market's activities. Then we look at the activities during the market and how it evolved, and then we look at what to look for tomorrow and the remainder of the week. The most important news that preceded the market, of course, the action at the Shanghai Market in China. The market was an absolute tear. It closed over 5% to the upside. I put up this tweet in the morning early, and I said that our futures, the U.S. futures, are following the action in the Shanghai market. And I outlined a resistance level in the Shanghai Composite Index. However, it blew right through it, and it seems like the Shanghai market was on autopilot buying. Here's the level that I identified from weekly basis in the Shanghai Composite Index, and you can see it closed above it. For a moment I thought that the Chinese market might have some integrity, but again, the Chinese government, of course, cracked the whip and forced people and business and wealthy investors to open their pockets and invest in the market, and this is the result. You see 2 weeks of huge market gains. The Shanghai market has no respect to the technicals or any fundamentals or anything. It's driven right now by government action. So I stay away from it. I'm staying away from any of the Chinese stocks. I don't trade them. I don't invest in them. I don't like investing in anything Chinese because you cannot trust anything that comes out of there. With that being said, our government also with the Fed is manipulating the market as well. It's encouraging people to continue to buy and buy and buy. You saw what happened in the market action today. It was absolutely ridiculous to the upside. We're getting way overextended here. We'll get to that when we talk about the market activities during the day. The second major piece of news is, of course, regarding the PPP loans. The Secretary of Treasury, Steven Mnuchin, came out and said he's going to release a partial list of those who received the PPP loans, and he tried to cover for them. Notice that this is taxpayer money. We deserve to know where the money is gone. But now they're releasing partial list because the other part of the list, of course, names that they don't want us to know. And you can come up to the conclusion here, we're not children, we know what's going on. One, they used the coronavirus crisis to loot the Treasury. They opened the vaults, and all the cronies came in. They looted the Treasury. They used it as an excuse, the coronavirus, to loot the Treasury and become richer. This is the kind of stuff that gets you in jail in third world countries. But perhaps we're becoming now lower than a third world country here in the United States. This is the kind of world we're living in right now. Another headline of the coronavirus closures, Miami-Dade County, or the city of Miami, is closing restaurants and bars because the spread has become absolutely ridiculous over there in Miami and the state of Florida. It's reaching and breaking records every day, so they had to do something to control it. Of course, the market should be concerned about closures in major economic hubs like Miami in the United States. But the market right now in its last hurrah period and just pretending to not care about anything. We've seen the same story back in February when we heard about the cases in China and in Italy. Before we dive into the market activities today, let me remind you that in yesterday's video, if you haven't watched it, please go back and watch it, because I outlined for you that as Apple and Tesla go, so will the market. These two names will shape the next direction of the market. Today they were an absolute tear. Apple closing 2.6%. Tesla, another update, over 13%. If you think it's getting ridiculous, because it is, you are not alone. This is what we call the last hurrah period of the stock market. Let me give you an example from a few months ago in February of this year. This is a daily chart for Microsoft's stock all the way to February 20th, 2020, before the market crash. Let's look at this period right here. During this period, we had news about the coronavirus in China. We knew about all the bad news that are going on with debt and with the virus and with everything else. The stock kept going up and up almost every day on a tear, and it diverged way higher than its 20-day moving average. What was the psychology back then right here? It was absolute euphoria. Everything is going to go up. Buy Microsoft, it doesn't matter. It's going to 200, it's going to 210, it's going to 300. Just keep betting. It's like an auction. And if you raise the alarm that maybe this is getting a little ridiculous because of the divergence and the extension to the upside higher, way higher than the moving averages, and the coronavirus going on in China, you were mocked and ridiculed because everybody was in the euphoric mood. This was the last hurrah for the run. It's the last couple of weeks where they juice every little gain off the market, and they invite the Johnny-come-latelys to join the rally only to be slaughtered right away. Looking at the same chart after the recovery, this is more than a V recovery. It just went way ahead of itself. Every tech stock, big tech stock, whether it's Amazon, Netflix, Apple, Tesla, whatever it is, they look similar. They're way extended. They're going to the atmospheric levels. And the psychology here is the fear of missing out. I don't want to miss out. I keep hearing about all the bad news about the coronavirus and all of that. But I keep hearing about the stock market going up every day. You get tempted. You join the rally. And then you know what's going to happen next. The similar story that happened here will be repeated again here. The guys who've been shorting and shorting and shorting, getting their asses kicked, they finally switch their bets when they see a rally like this. And they give up. They throw the towel. They say, all right, we're going to switch our bets to long. The moment they go into the long trade, the market reverses and flushes down to the downside. This is classic market psychology. This is why you have to be confident and you have to be consistent. I am bearish and I'm confident in my call. I know what I'm doing. Big days like today don't faze me. Don't faze my calls because I know what I'm doing. I have a set of facts, historic accuracy that I can look back to and determine the fate of the market. I will not jump right here in the market, any stock, not just Microsoft. So what do you do here with this kind of information? Do you start shorting? Certainly not, because you're playing God. That's another psychological mistake in the market. You wait till the market gives you the signal to short. It will break. There will be a lot of meat on the bone for you to score as a short, but you have to wait for the market to show you the signs. What you actually do is book your profits if you own stocks in Apple, in Tesla, in Microsoft, PayPal, Square, any of the stocks that are going on a tear. This is the time to book your profits, stay in the sideline, watch the show, watch the correction, and you get in and you buy at lower prices and increase your gains. You have to have some dynamic thinking in trading. This is a daily chart of the VIX. Today I released a tweet early in the morning, about 30 minutes after the market opened, saying that the market rally is so huge, yet the VIX is only down 4%. And it's actually rallying off the low along with the market. There's something wrong here when the VIX and the market go in the same direction, where the market goes to the upside, and the VIX is also going to the upside. There's something wrong here. This is the signs of the last hurrah. The idiots are buying on autopilot, buying stocks. The smart people are buying protection. They're buying SPY puts. They're buying the VIX. In the middle of the day, as the VIX started to rally, I put this humorous tweet from Uncut Gems, the movie from Adam Sandler. It's basically saying that the VIX is imitating Adam Sandler in that movie. Remember that scene when he goes and says, I disagree, Larry. I disagree. I'm going to put all my money in Kevin Garnett. That's what basically the VIX is doing. The VIX is looking at the market's action and saying, I disagree. I'm just going to keep going up. Certain investors are buying protection. and they're preparing the popcorn for the show to come. And what do you know? We closed in a big day in the Qs and the Dow Jones, the S&P 500, but we also closed in the green, in the VIX. Look at how it popped off of the blue line, took support, and closed in the green. You cannot ignore that sign. It's not a mere coincidence. It is a signal for what's going to unfold next. This is why it is very important in trading that you look and watch for indicators, because they tell you what's going to happen before it actually takes place. Here's a short recommendation I released around 7 a.m. in the morning, Pacific time, 10 a.m. Eastern, about Wynn Resorts. I shorted it. I wish I shorted more because this was a quick score. And of course, Wynn was rallying. It rallied on last Thursday, last trading week of last week, and it continued to rally today, even though the numbers in Macau are down more than 90%. The numbers in Vegas are down more than 90%. Traffic in Vegas casinos is evaporating. It peaked a little bit. It caught a little bit of steam when they opened the casinos the first couple of weeks. And now it's kind of dying out because the resurgence of the coronavirus and the requirement to wear masks inside the facilities. It's not fun anymore. Nobody wants to go in the casino. It's very risky. It's not fun. And nobody has money to lose. Even if you have money to lose, it's just not worth it. Wynn is one of the weakest names in Las Vegas. And this company might actually not survive if this crisis continues. So 30 minutes later, after my recommendation of short Wynn, what do you know? It reversed all its gains and went to the red. And I believe it closed in the red as well. Here's another tweet where I actually believe that the Vegas casino stocks are telling us there will be another closure. They will shut the casinos down again. Remember, last week there was a headline of a worker in Caesar's Palace who died from COVID. We have a lawsuit from the Culinary Union, the biggest union in Las Vegas, against the casinos. People are suing the casinos. They're not going there. Their operating costs are getting higher. It's not worth it to keep the casinos open. They're going to have to shut them down. This city of Las Vegas is the poster boy of the coronavirus crisis. Will come a time where it needs federal government intervention to save the city of Las Vegas. Here is where the Qs finished. From a daily perspective, let's switch to a weekly, and I'll show you this tweet about the divergence from the 20 weeks moving average. Last time we diverged, we corrected hard. We're diverging even more right now, so you can imagine the magnitude of the correction that's about to come. Stocks go up over time, granted, but the key word is over time. This look is not over time. This is just one vertical line. When you have looks like this, we've seen them before if you have any experience in trading and investing. They always come down. Here's a 15 minutes chart of the Qs. There's really nothing to see here. It was a gap, big day to the upside, a little bit of consolidation here, and a continuation of the buying. There's nothing to see here. It's just going up and up and up. So what are we looking for tomorrow and the remainder of the week? Remember, on Sunday, I gave you two scenarios of the resolution out of this consolidation box. Both of them are bearish. One, either we're going to reverse right from the box down, or they're going to push the market higher and higher and reverse from a double top right here. This is one top, another one, and we reverse. So we'll see how that plays out. But don't underestimate the last hurrah, the power of the last hurrah period. They could push the market really high before they break because they want to squeeze every last penny of the gains before crashing the market on your heads. The last thing that is worthy of mentioning is, if you notice today, the price of puts. I had puts on Tesla and other stocks. Even as stocks continue to go up, certainly Tesla did, kept going up and up and up. And you're assuming that, my puts on Tesla is going to disappear or expire worthless. Amazingly, though, they actually increased in value or remained flat. that is another signal that tells you there's a demand on puts. So one thing to keep in mind, along with the VIX, put prices remain stable as stocks go up. The VIX closes in the green as stocks go up. These divergences will be resolved very soon in the form of a big correction in the stock market.